put the gold, and as crazy as it sounds, Kai, you put it at 142,000 an ounce, and 100% of your liabilities on the U.S. balance sheet would be offset with gold and would give you options. And every $4,000 increase in the price of gold, the Treasury General Account gets $1 trillion free and clear. Is it crazy? Yeah, it's unconventional, but it's being bantered around by a lot of people. He said something to the extent, and I quote, Poland owns gold because when someone shuts off the power to the digital financial system, a system where all the electronic accounting records are held digitally, we hold gold because when that happens, we will have the ability to rebuild our system.
Special coverage of the Vancouver Resource Investment Conference is brought to you by First Majestic Silver, listed on the TSX and the NYSE under the ticker AG. Hello and welcome back to Soar Financially. We are in Vancouver. We are at the Vancouver Resource Investment Conference in this beautiful convention center downtown Vancouver. And I'm joined by none other than Andy Schectman, president over at Miles Franklin. Andy, it's great to see you in person again. We always do this virtually. Always great to meet in person. How are you?
I'm great, Kai. Thanks for having me, buddy. And it's good to see you in person, too. I think this is 3 years in a row.
Absolutely, it is. Yeah, it's become a tradition now, I think we can call it.
And I look forward to it.
Same here. I love coming to Vancouver, meeting our guests in person. Happy New Year, by the way.
And to you as well. I hope it's a good one for you and your family.
Health and wealth. I stole that from somebody.
It's true, man. It's true.
I really like it. So, Andy, we got lots to talk about. Big day in the U.S. today. It's Martin Luther King Day, but also it's the inauguration of the new president, Donald Trump, in the White House here. Lots to talk about. Yeah, I don't even know where to start, quite honestly, because there is a lot of content. We'll start maybe with your presentation, because I think that's an interesting, really workshop title that you chose, and it's a bit of a provocative one, and we can take it from in various directions based on the title.
Right.
I haven't listened to it, so you'll have to give us the cliff notes here, Andy. But the title was "Revaluing the Dollar." Will that solve all our problems? Paraphrasing a little bit here, but what were the main takeaways here, Andy?
So, gold is held in every central bank balance sheet, ironically enough, in an account called the Gold Revaluation account. You have the head of the Dutch National Bank who's been advocating for revaluing the price of gold for a very long time. This isn't a new topic, by the way. I mean, Roosevelt confiscated gold in April of 1933, paid everyone $20.56 for their $20 gold piece. That 56 cents 100 plus years ago had significant purchasing power back then when a loaf of bread was a nickel, and you're getting an extra 56 cents for every $20 coin that you turn in. It had significance. People were happy, and then immediately he devalued the dollar by 40%, making gold $35 an ounce. And so it was revalued in essence. And we saw the same thing in 1971 when Nixon closed the gold window, only it was revalued by the market, not by a central authority. The window was closed at $35 an ounce, and here it is today at over $2,700 an ounce. It was revalued. To bring it closer to home, Senator Loomis from Wyoming, Cynthia Loomis, at the Bitcoin conference in Tennessee, speaking right after Trump, gets up on stage and says, President Trump is advocating for the Bitcoin Reserve. I am going to float a bill that requests the gold being held by the Federal Reserve on behalf of the Treasury is revalued, with the proceeds being used to buy the Bitcoin. And so the point of it is that it is an option where all of the central banks have been accumulating gold for the past several years. And before that, the most powerful bank in the world reclassified it the only other Tier 1 reserve asset in the world. And if you take a look at the progression, the BIS is not only the biggest bank in the world, they're the most powerful. They make the rules, they know the decisions. Why would they reclassify gold Tier 1? Why would the central banks be purchasing it at a level the world has never seen? And it's not stopping. October and November 2024, I haven't seen the December numbers yet, their purchases were double the 12-month moving average. And then equally as startling to me and telling is the repatriation. Over 40 countries have brought their gold back from the New York Fed and the Bank of England. India, as an example, bought more gold in the first few months of 2024 than they did all of 2023, and they brought all of that home along with 100 metric tons they've held at the Bank of England for a very long time. There is a drive to repatriate the price of gold. There is a drive, or repatriate gold in terms of possession, and there is a drive to revalue the price of gold to reflect a balance sheet across the globe that are filled with liabilities. And as it is right now, gold is not allowed to offset those liabilities on the balance sheet and is valued across the globe at $35 an ounce on those balance sheets. It's no wonder the head of the Dutch National Bank or one of the main representatives at the Bundesbank say, yes, we have all this gold in the revaluation account. We should do something with it. So yeah, I think it is an option. It's a lot easier than inflating outright or defaulting outright. Put the gold, and as crazy as it sounds, Kai, you put it at $142,000 an ounce, and 100% of your liabilities on the U.S. balance sheet would be offset with gold and would give you options. And you know, every $4,000 increase in the price of gold, the Treasury General account gets $1 trillion free and clear. Is it crazy? Yeah, it's unconventional, but it's being bantered around by a lot of people. And when I saw it come closer to home with Senator Loomis actually bring it up, I started to think, well, this is something that's on the table. They certainly notice it.
Yeah. Now, 142,000 is a big number.
Of course.
Is
Bitcoin at 100,000.
Good point. But everybody like who owns gold, even an ounce, all of a sudden that ounce is worth $142,000.
Right.
The question is, what does that do to the monetary system in general?
It would create hyperinflation.
Exactly.
Quickly. It would create hyperinflation. It would eradicate debt across the whole spectrum, and then would hopefully allow a new system to rise from it. What we're talking about is a reset. It's a reset, and it's a way to, I think, reliquify all of the central banks and start on a foundation of solid money. The central banks are the ones that would benefit more than any. You talk about the people who will even own an ounce of gold, it's the pimple on the elephant's rear end. Because as Rick Rule will say, if you ask him, he's here, he'll say 0.5% of the American public owns any gold whatsoever. You're talking a minuscule amount. So the big amount of gold is held by the central banks. It would benefit all of the central banks.
You mentioned just something I want to follow up on. It's like all central banks have gold on their balance, or not all, but central banks have gold on their balance sheets. Like, are they all valued at $35 an ounce, like across the globe? Germany, like I don't know about.
Yes.
Like, so Germany's gold is also valued at $35.
All of the European is 35. The United States is 42.22. Okay. And I'm not exactly sure when they valued it and officially made it at 42.22. But all of the European countries, the Bundesbank included, is $35 an ounce on their balance sheet. And they call it the revaluation account. So in essence, if you think of a balance sheet, everything's balanced. They have their gold in their asset category, and they have the exact same amount in the revaluation account on the liability side. So they offset, because the way the rules are right now, you cannot offset a liability with your gold. What they're all saying is, let's put gold at a much higher level and write it off against all of our liabilities. And in essence, just like that, your balance sheet. Now, people will say, well, does that mean they have to sell the gold? No. It just means that their liabilities and their assets have balanced out, which would give them the ability to do other things that they otherwise couldn't do. To me, it's if you take a step back again and realize, why did the BIS reclassify it Tier 1? Why are the central banks buying it off the charts? And why are they repatriating it? And I'm not saying it's going to happen, but I'm saying it's something they notice. It's one of these deals that it might just be too hard to pass up in terms of the benefits outweighing the drawbacks.
If you look at just the debt, and they would say, it's like, let's just erase the debt. They don't even have to revalue gold. Like, what's the difference there between just deleting the debt? It's like, oh, we're not going to pay back our debts on the bonds that we've issued. We were not going to worry about that, versus revaluing the dollar. Do you see a difference there? Or
yeah,
is that the
I do.
Same?
I mean, I do. In the United States, it's not as big of a difference as you would think, because the majority of all of the debt is owed to the American people. Medicare, Medicaid, Social Security, and government military pensions are $175 trillion unfunded, all owed to the American people. And over the last several years, as the Americans have been chasing yield, leaving the banks, going to money markets, record $7.5 trillion in money markets. That's all invested in treasuries. The insurance companies, the pension funds, they're all invested in treasuries. As we have been chasing yield, the American public has been buying the treasuries. At the same time, most of the world has been shedding and rolling off their treasuries and replacing it with commodities. We only owe $7 trillion to the rest of the world. If we were to Jasara, in essence, just forgive the debt, most of it would be on the American people. It would be a lot easier to start over and reset it that way. But I don't think that's something that they want to do. This would kind of be it would, in essence, kind of be the same thing to a degree, but it would be one that would, I think, not immediately put the United States in a position of loss of credibility completely and totally. No one's going to trust them again if they just outright default.
No. Just to clarify and follow up, it does include the off-balance sheet debt, as well as you said, Medicaid and all those things are included in the 142,000.
No.
Oh, okay.
No, it's not.
Okay.
And that's the funny thing. That's just the almost $37 trillion. Based, if you take the debt and divide it by the number of ounces supposedly held at Fort Knox in the New York Fed. So no, it wouldn't. And that's the clever thing, the way that they do with the debt is that's off balance sheet. Most people never even think about it. But Medicare Part B is $99 trillion underfunded in and of itself. Part D, the prescription's $22 trillion. Social Security, $77 trillion. These are problems. Bad enough that we have an acknowledged debt of almost $37 trillion. It's in essence, it's increasing at the rate of about 100,000 per second. So as we have done this interview, we're already several $1 million deeper in the hole and growing. And so yeah, no, it doesn't. But it would certainly be an approach to begin our journey to reconciling our massive indebtedness.
Some news I've missed last year for some reason. I've no idea how it escaped me, actually, is that Poland stated they want to own 20% of their GDP in gold. And they started aggressively buying. It was the central bank, actually, that bought the most gold in 2024.
Yep.
What do you make of that? How was that missed? I don't think any of my commentators even mentioned that on the program.
I talked about it a lot. And if you go back and watch my videos, you'll see I talked about Adam Glapinski. He's the head of the Polish National Bank. And Adam said something that caught my attention that I screamed about. I'm sorry, I'm remiss, I didn't say it with you. Perhaps the question didn't go that way. Now, I'm going to paraphrase what Adam said, but I think it's very, very, very interesting that a central banker said what I'm about to say. So they were talking, he was asked, why is the Central Bank of Poland buying so much gold? And you're right, the number that he did say is we want to have it represent 20% of our assets. He said something to the extent, and I quote, Poland owns gold because when someone shuts off the power to the digital financial system, a system where all the electronic accounting records are held digitally, we hold gold because when that happens, we will have the ability to rebuild our system. He says, now I'm not saying that's going to happen, he says, but it's the job of the central bank to be prepared for anything. In essence, what he is basically saying is that you get some sort of an event that blows up the internet or blows up the electronic accounting records, an EMP, whatever it is. And I found it to be very shocking that you would hear something like that from a head of a central bank basically saying, you know, when the electronic accounting records go poof, well, this is why we own gold. And it was very shocking to me. So I've been following the Polish gold acquisition. It's been going on for 2 years now. They bought an awful lot in 2023 as well. And they are very rapidly crawling up the chart of countries that have the most gold per capita or towards their in relation to their GDP especially.
Yeah, for some reason it didn't register with me. If you might have mentioned it on our program, but didn't
Check
register.
out Adam Glapinski and his comments on why the Polish central bank owns gold. And you'll see what I did was kind of a poor paraphrasing of it, but the actual verbiage, the actual transcript will blow your mind when you read it.
No, interesting. I'll definitely do that. That's going to be my homework for the week, actually.
Right on.
And you touched on CBDCs, and you were on a panel yesterday, and I think the topic was CBDCs, gold and the dollar, the next chapter in the currency wars. What were some of the takeaways from that panel?
Some of the takeaways from the panel was more or less that the de-dollarization is real, that it's continuing, that the weaponization of the treasury market is something that will be hard to come back from, that it's a growing trend, that the indebtedness of the U.S., the sanctions, Trump is saying, well, any country that continues to want to de-dollarize, we're going to throw 100% tariffs on. That's not a tariff. That's a sanction masquerading as a tariff. A tariff is used to legitimately protect your manufacturing. That's not what he's doing. He's saying if you don't do this, then this. That's a sanction. And so what the I guess you could say the consensus is that de-dollarization is real. It's something that would be a very big mistake to underestimate. And I pointed to the BRICS and their Enbridge technology and the unit settlement token that the head of the New Development Bank, Dilma Rousseff, and she's the former president of Brazil, has said, in principle, we agree. We agreed to a new settlement currency called the unit. I talked about how Enbridge was kind of hijacked by the BIS at the 12th hour. To me, it was espionage, right out of a James Bond movie. But the bottom line was, and the guys on this panel were very smart, and they basically all agreed that de-dollarization is real, and it's happening, and that indeed we are moving towards some form of a digital currency. When you take the world's GDP, all of it, and take the countries that comprise 99% of it, every single one of those countries, the United States included, have a CBDC either under development or in operation. And in the case of the United States, Lael Brainerd, who used to be at the Treasury, and then she was at the Federal Reserve. She ran against Powell for his reappointment, ended up being the vice chair at the Federal Reserve, and then she's now the number 2 economic advisor to President Biden, or was. Today he's on his way out. I suppose she will be too. But she's a modern monetary theorist, and when she was at the Boston Fed at the beginning of Biden's administration, he wrote an executive order to fast track the development of the CBDC. She ran point on it with MIT. So the United States has a CBDC, whether they're willing to, at the point of being able to roll it out or not sure, along with Project Agora and Project Cedar, which are the cross-border payment systems that the Federal Reserve is testing. We're moving in that direction, I guess, was the consensus, and that to underestimate the trend of de-dollarization would be a big mistake, even under President Trump.
Who do you think will sort of install CBDCs first? I think I heard Europe might be first. They're pretty far away, pretty far along with the development and of it and introduction of it. Scott Bessent was asked about it the other day in front of Congress when he was doing his congressional hearing before his appointment. He was asked about CBDCs. I said the U.S. doesn't need it. We have enough diverse investment products. We don't need it. What are your thoughts?
By the way, his largest holding is gold. He's come out and said that. And, and he's probably right. Doesn't mean they won't do it, but he is probably right. It would have been the BRICS. And at the 12th hour, the BIS pulled out of Project Enbridge, which is really very underhanded, will only crystallize their desire and resolve to issue a common settlement currency, not a common currency, which is different, not a BRICS currency, but a settlement currency. The BIS Innovation Hub, along with China, Hong Kong, Thailand, and the UAE, developed Enbridge, which is a cross-border payment system, which would have allowed the unit to trade across it. And the Innovation Hub at the BIS for 4 years helped them refine this Chinese technology. And at the meeting in Russia, at the 12th hour, the BIS comes out and says, well, we really can't be part of any country or any system where countries that are sanctioned by the West, it represents a conflict of interest. We can't do this, so we're pulling out, and we're gonna shut down Enbridge. And it's as if they just realized for the very first time that Russia is the R in BRICS. After 4 years of doing this, Russia's been sanctioned for a long time. They wait until it's operational and being rolled out. So now it's going from Enbridge, it's called the Bridge. If I had to guess, it would be them that would roll it out first. I don't know how far along or what desire Europe has to do it, to tokenize or to turn the euro into a CBDC. But I do know if it were up to the BIS, they wanted everyone by 2025 to have an operational CBDC. And just about all of the industrialized world has one ready to go roll out. Will we see it? Don't know. And as it pertains to the new Trump administration.
That was my next question.
Yeah.
What are your thoughts on Scott Bessent?
I think he's someone who understands precious metals. Judy Shelton understands precious metals, wants a 50-year treasury collared to gold. Senator Loomis says, let's revalue it. I mean, there's a lot of it. And if he did issue a digital currency, he could go the other way and use constitutional money and peg to it, not the CBDC route that Klaus Schwab and the World Economic Forum wants and the United Nations and this surveillance state. So I don't know. I'm hopeful. I'm hopeful that they understand what sound money is. Scott does, and Judy does. I'm hoping Judy gets onto the Federal Reserve Board of Governors, and of course she was Trump's nomination to run the Fed in his last administration. Although she wasn't confirmed, there is a lot of belief that she will be on the Board of Governors here very soon.
President Trump is going to be inaugurated any minute now here as we speak. Actually, like, what are your thoughts? Like, what are the first 100 days going to be looking like?
You know, after what we've lived through, Kai, I think people just want to get our culture back. More than anything, it's been 4 years of craziness, wokeness, and distortions of what America is, a system that was based upon merit and hard work that was usurped for lifestyle. That's not right. The lawlessness, the open borders, the questions surrounding the election integrity, surrounding the judicial system and the FBI, all of these things I think need to be addressed, and I think it will be met with great optimism. What do the first 100 days look like? I don't know. I mean, I can't believe that there aren't a lot of pitfalls ahead for him. As an example, tomorrow the Treasury runs out of money, and they're at a place where if they don't raise the debt ceiling again, and it's ironic it happens the day he takes office, then there's problems. They're already, as it is, suspending pensions and retirement benefits to postal employees and civil servants. I think that it's a mistake to think that this will go smoothly. He certainly has a lot in store for him. They're leaving him a very messy house. The first 2 months of the fiscal year, October, November, was the greatest indebtedness the United States Treasury has ever gone into, ever, in its history in the first 2 months. Massive overspending, right? And all of his agendas, they're trying the best they can to hijack it, including drilling around the offshore around the country. Made an executive order, Biden did, accelerating the war in the Ukraine, giving $175 billion to the Ukraine over the past couple of years, while at the same time we have problems in Palisades, in Palestine, Ohio, Palisades, California, in Maui or Lahaina, and of course in North Carolina. These problems of taking care of the rest of the world but not taking care of our home and our infrastructure, I think, have to end, and I think you'll see that right away. But he's being left a messy house that I think will not be as smooth as people think. I think there's a tremendous amount of optimism and euphoria surrounding what he can do to bring our culture back. But I think what people are not paying close enough attention to is what's under the surface financially. And I have a feeling it's going to be a very bumpy first 100 days for sure, with the markets, with the recession that we're, by all accounting standards, the SAM rule, the unemployment increase, the amount of money in the money markets, all of these things are saying recession. At the same time, all of the metrics on the value of the stock market are screaming overvaluation, including Warren Buffett, who has $400 billion on the sidelines. And so, yeah, this is a situation where there are some black swans hiding under the surface.
Yeah, definitely not easy, and I don't want to do his job in the next 100 days just to figure out what is actually amiss.
No, but it's something that, you know, I think he's certainly, look, for those people who think outside the box, some people would say, let me put it this way, I interviewed Francis Hunt, and Francis said to me he was selected, not elected. I said, wait, what do you mean by that? I said, there are people pulling his strings. He said, look, the things that we've seen over the last 4 years was allowed to happen. Now this is him, not me. They allowed these things to happen. They allowed the election questions to happen. They allowed the craziness to happen so that he would come in challenged by a lame duck challenger and win overwhelmingly to bring back all of this stuff. He said, you watch, they'll issue a digital ID in order under the guise of election integrity. If you look at the digital ID 2020, you'll see it's who backs it. You have, not only do you have the Gates Foundation and the Rockefellers, but you also have, I forgot the name of it, the big vaccine, it's like Canva, or I forgot the name of it, but it's the big vaccine organization. They're the ones who have the patents on ID 2020, which would commingle your passport information, your bank information, your healthcare information, all in the form of a digital ID that now Trump says we're going to roll out for election integrity. What he's basically saying is that he was selected to roll in the digital surveillance state, and that he is the Trojan horse. Now, I'm not saying I believe that, but what I am saying is that if you don't question everything after what we've seen over the last 4 years, it's a mistake. So the question is he the horse or is he riding on the horse? Which direction does he go? And that's something that I can't answer, but I will tell you it's an interesting thought experiment when you think about, is he part of the deep state who has been open, bring in this cabinet, very high-tech cabinet, crypto-based cabinet, but at the exact same time, make it look as though he's anti-establishment, but when in reality he's trying to do the agenda because no one else would accept it. No one would accept a CBDC. No one would accept these things unless it was done under the pretense of making America great again.
So Andy, I don't think we've talked silver in a while. Even in our last interview about 3-4 weeks ago, we barely touched on silver. Let's talk about silver as a strategic asset. Russia's been buying a lot of silver recently. Instead of gold, they've been buying silver. Let's talk about the strategic importance of silver and how it is reflected right now.
It is a strategic asset. It should not be an industrial. You look at the amount of silver that India's imported, almost 900 million ounces in the last 4 years. As you mentioned, Russia making a part of their strategic stockpile. China is gone from a net exporter to a net importer. They're flying all around the world to Peru and to South America in particular, disintermediating the market and buying directly from the miners. They're buying doré bars, which are a crudely refined bar, maybe 40-50%, before it gets sent in for further refinement. And they're buying concentrate, which is like a sludge byproduct of the mining and the refining process, and sending it all home, paying double what the West will, and having it refined further in China. 77% of all of China's industrial uses of silver is coming from concentrate that they buy directly from the miners, which disintermediates the marketplace. No one knows how much they're getting. It doesn't affect the price. They're the second largest producer of it in the world as well. And here we are again. We'll have a 280 million ounce shortfall this year again, which is the fourth year in a row over 1 billion ounces short. It's a structural deficit that's not going away. You had 47 million ounces delivered off of COMEX in December. Who's taking that? Where's it all going? On the LBMA right now, you have 800 million ounces. It's the lowest position they've ever had because of that 800 million, 500 million belong to the ETFs. That leaves a float of 300 million ounces. They trade 290 million ounces per day on the LBMA. They trade the entire float. However, they admit to the fact that that trading is 10 times understated because they only post the final settlement numbers, which would mean they're trading as much as 3 billion ounces of silver per day, which is 3.5 times annual global mine supply. They have a 300 million ounce float against between 4 and 6 billion ounces short naked. 90+% of all of those short trades are naked, meaning there's nothing behind it but stupid commercial banks' ability to continue to suppress the price. And that's something that I think needs to be understood because what it is a powder keg waiting to happen. And whether it be a delivery failure or a force majeure, on COMEX, silver is rehypothecated close to 2,000%, meaning 20 people hold a 5,000 ounce contract. If every one of them stand for delivery, one will be lucky to get the metal, the rest would be cash settled or force majeure. You have military industrial complex that needs silver. It is omitted in the supply demand numbers. If you Google H.2768, I believe is the number, that was a congressional hearing in 1942 where they basically, they're talking about using silver for war purposes, and they said at the present rate we're using 200 million ounces of silver per year for military. Well, 3 years ago when I gave a speech right here, right behind us, I said that there's 500 ounces of silver in a Tomahawk cruise missile. And a guy that was here yesterday and the year before comes up to me and he says, I work for the Department of Defense. I helped design the Tomahawk and the Patriot missile. I think you're right. I think there's silver in it, I'll let you know. He comes back last year with a stack of pictures. He says, this is all declassified, so I can tell you this. This is how we had to shoot it out of a platform in the ocean. Vertically, they were meant to come out horizontally out of torpedo tubes and all this stuff. He says, but you know what? You were right. There's between 13 and 14 kilograms in the cone of most of these high-tech missiles. That doesn't take into account the aerospace and the ICBMs. All of these super high-tech military applications need copious amounts of silver. So take a step back and ask yourself, why would 8 commercial banks be stupid enough to have the largest concentrated short position in any commodity ever traded in the history of COMEX on silver? Why would those same banks be short between 4 and 6 billion ounces of silver in London off of a 300 million ounce float? Because they're stupid, number one, as stupid as a mud wall, and number two, they're being told by very powerful people, in particular the military industrial complex, to keep the price low because they need it to make high-tech weaponry to sell all around the world. That's why it's happening. And the difference now is that the countries like China and India and Russia are not only coordinated and sophisticated and motivated, but they're wealthy enough to exploit the delivery mechanism. That is what is different. No one ever stood for delivery. These countries were not motivated nor coordinated to stand for delivery, and they are now. And that's where this ultimately ends. I look at silver as the most asymmetrical risk-reward trade I've ever seen. Lowest downside, best upside. And one of these days, look, the only way that you can successfully manipulate a market over time is to push it in the direction it's going. For a very long time, silver was very easy for these banks to manipulate. But being on the wrong side of a naked short right now in this market, where countries are actually including them into their strategic stockpile, where China is flying around the world buying concentrate and doré, tells me that this game has never been closer to ending, and really they understand what we're doing, and they're using our suppression against us. It's jiu-jitsu. Use your opponent's leverage against you, and they are. The reason they're not bitching about our suppression is because they're the ones accumulating it, and at some point we see the price setting move from the COMEX, move from the LBMA to places like Shanghai, where, by the way, Pierre Lassonde said the price ultimately will be priced in the East, not in the West, when the volume on Shanghai surpasses COMEX. Well, just recently, the Shanghai Metals Exchange and the Shanghai Futures Exchange combined volume is greater than that of the COMEX, making it number 2 most heavily traded platform for gold in the world. So how close are we? A lot closer than we've ever been, in my opinion.
Yeah, it sounds like it. Getting more and more closer. Big banks are traveling to China. We talked about that previously as well, just to meet with the Shanghai Exchange to cover their shorts, apparently. We've talked about that,
yes.
right? So, interesting topic. Has the Silver Institute come up with their forecast for 2025? Let me guess.
I
deficit?
haven't seen it. I'm sure it would be a big deficit. One guy you want to get on your show is David Jensen. And David Jensen has a Substack that talks all about the problems at the LBMA. I've learned more. I want to shout out to him because I've learned more about these massive naked shorts in London from David Jensen than just about anyone, and people should check him out, and you'll see exactly what I'm talking about. It's a powder keg waiting to blow. It truly is.
Best way for investors to play silver right now, Andy? Like, what do you think? Like, of course, buying physical is the one way, but any other way to do it? But
the only other way...
Is there even a way?
Well, I mean, physical silver is first and foremost, and that's the foundation. That's the base of your pyramid. But there are massive undervaluated and huge values in the mining shares, for sure. And there's only a handful of silver mining shares. I mean, really, truly, in terms of producing companies, there aren't that many of them. So yeah, I would buy a handful of major producers. I'd also buy something like Silver Wheaton, which would be a royalty company in the silver space. And I think that there's tremendous upside potential in the silver equities, but I don't think you want to ever mistake the two. The physical is the physical, the mining is the mining. They're cousins, but after all, the mining shares are derived off of a stock market, which one could argue is the most overvalued stock market ever. So if the whole market collapses, well, it can bring it down, but let's not forget during the Great Depression, when the market collapsed, home stake mining was the #1 performing stock of the entire stock market. So to say that, you know, it may fall at first, but the value found in gold and silver right now in the mining shares is unlike anything I've ever seen. That goes up on the top of your pyramid along with your cryptocurrencies. The middle of the pyramid would be things like treasuries, short-term treasuries throwing off a yield, or utility stocks throwing off a dividend. Base of your pyramid never goes backwards. The middle of your pyramid is something a little more slightly riskier, throws off some return, and the top 10% is the home run. But at the values you see right now in some of these silver equities, that top 10% could outperform the bottom 90 very easily, in my opinion. They're that kind of valuation right now.
And you always have to ask you, because you run a bullion dealer as well. Like, what was the supply and demand last year? Like, what was the most sold coin as well?
Silver American Eagle is probably the most sold coin. It's by far, because the premiums came down. The 3 years previous premiums on American Eagle were unlike anything I've ever seen. Double digits worldwide, $15, $16, $17 over everywhere. And now you're able to buy them at $4-ish over, which is still higher than it was most of my career, but much, much less than it was during the pandemic. So the Silver Eagle has been really the one that I think has got the most attention.
Yeah. You see a lot of selling?
Yes.
Yeah.
We've seen a lot of selling over the last few months, in particular since Trump won the election, and I think it's irrational. I think it's very irrational. A lot of these people are chasing the risk on trade. It's a mistake. And in fact, as we've seen a lot of selling, we've also seen a lot of very large purchases from, I would say, sophisticated investors who have made very, very large purchases. But what we have seen is more selling than I've seen since 2017 by the public, most of which are not doing it for any other reason but then to chase the risk on trade. And you have a risk on trade that is wickedly overvalued right now and very dangerous for maybe a potential rug pull. So yeah, more than I would like to see.
Phenomenal. Andy, I always appreciate chatting with you here at the conference. It's always a pleasure. As we said, it's pretty much a tradition now. We've done it 3 years in a row, so got to do it next year again.
You're one of the good guys, brother. It's always a pleasure.
Appreciate it so much,
Yeah,
Andy.
man.
Thank you so much for joining us.
Good to see
Thank
you,
so
my
much.
man.
And,
Safe travels back home.
Thank you. Yeah, I'll get to enjoy Vancouver a few days more. So
Yeah, maybe I'll see you on the slopes up in Whistler.
Oh, that'd be phenomenal. I'd love to do that. And everybody else, thank you so much for tuning in here from the Vancouver Resource Investment Conference. I hope you enjoyed this conversation with Andy Schectman. I tremendously did, of course. And if you did enjoy it, leave a comment, leave a like, and if you haven't done so, hit that subscribe button. We tremendously appreciate it. Thank you so much for tuning in. We'll be back with lots more. Thank you.